So the purpose of this video is to motivate our discussion. What is the purpose of this class that I'm creating? And even though this video is probably sitting up on YouTube, it is part of a class that I teach on a college campus. And this is the big question. You're running a business. A farm, for example. Is it a hobby or is it a business? We've seen in a previous video that a lot of farms don't make money and a lot of farms are being operated as hobbies. And there are important income tax implications when operating a hobby versus operating a business. And it's really important that when you consider like the IRS definition of a farm, if you look at the IRS tax rules, a farm earns a profit. And if you're not earning a profit, your farm is a hobby. The thing to remember is that 100% of all hobby revenue is treated as income for income tax purposes. More on this a little bit later. Now, there's no self-employment tax on that, but that's kind of a moot point. And we'll see an example in a bit and show you what I mean. If you're earning a profit, you only pay taxes on profit. That's the important thing to always consider. Now, if you're running a business, you're going to have self-employment taxes. But always remember that you're only going to pay taxes on your profit. And this brings us to what is commonly called the hobby loss rule. The thing to remember is that all income from all sources must be reported to the IRS. Full stop. If you brought money in, you've got to report it to the IRS. It's taxable, all of it, okay? Now, prior to the 2018 tax year, the IRS would let you deduct expenses from your hobby if the expenses didn't exceed the revenue from that hobby. So the question then becomes, is your avocation, the thing you're doing for fun on the side, is it a hobby or is it a business? Well, I don't get to decide that. That's what the IRS determines. You have to be able to convince the IRS that you're running a business. Let me give you an example. Let's say you spend $20,000 buying stuff, whatever that stuff might be for your side hustle, and that brings in $25,000 in revenue. You're going to pull out a Schedule C, put all your expenses and your revenue on Schedule C. Schedule F, if you're operating a farm, your profit's $5,000. You'll pay a 15.3% self-employment tax on that $5,000. And let's say hypothetically your marginal tax bracket is 22%. Well, you owe the IRS some money. You owe them 15.3 plus 22, 37.3% of that $5,000, which comes to something like $1,865. If I'm doing the math right in my head, feel free to double check me. If that was a hobby, since we're no longer allowed to count hobby expenses against hobby revenue, that's $25,000 in taxable income that goes on IRS Form 1040. And a 22% marginal tax bracket, that means you're paying something like $5,500. And so there's, $2,700 worth of difference between those two numbers. So this video just saved you $2,700. I hope that's valuable. So what you have to do is you have to prove that you're operating a business. And the best way to prove that you're operating a business is to actually operate a business. And the best way to show you're operating a business is to earn a profit. This is known as the presumption of profit. An activity is presumed to be engaged in for profit if it produces a profit in 3 out of 5 consecutive years. And there's an exemption for horses, 2 out of 7 years with horses. And if the taxpayer meets that threshold of presumption, the IRS then has the burden of proof. They have to prove a lack of profit motive. So the most important thing to do is to actually attempt to earn a profit and follow through on that. The idea is to actually make some money. That's what businesses do. Businesses don't exist. Businesses aren't charities. We're not talking about not-for-profits. We're talking about a business operating for a profit, typically a sole proprietorship, right? You're actually trying to make money. That's why you run a business. Let me clarify that. Take any 5-year period consecutive, 5 years in a row. You got to earn a profit 3 out of the 5. And if you earn a profit 3 out of the 5, it's up to the IRS to prove that you're operating a hobby and not a business. More on what we consider evidence for that in a little bit. Now, horses have a lower standard, 2 of 7 for most horse operations, breeding and racing, that kind of thing. And again, this is called the presumption of profit. You can look this up in IRS publication 225. Now, another thing you can do is you can stall, right? That might not be the correct term. Oh, here's the actual form. It's got a really long title. It's titled Election to Postpone Determination as to whether the presumption applies that an activity is engaged in for profit. So basically this form, for a lack of a better term, allows you to buy some time while your business grows during its initial startup phase. You've got to file the form in tax year 3. What does that mean? If you start your business in the year 2001, January 1st, 2001, well, then 2001 is tax year 1, 2002 is tax year 2, 2003 is tax year 3. So you would actually turn this in 2004 as you're doing your paperwork for tax year 3. My advice is to consult an accountant before you start filling out this form. I am not an accountant. I'm not a tax professional. You don't want to hire me. All right. So what happens if you're not earning a profit? Then things, of course, get a little bit more sticky. If you're not earning a profit, is it possible that you can still file as a business and not as a hobby? And well, the IRS may ask you to prove that you're engaged for profit. And most sources that I read will tell you there are 9 factors. These 9 factors are holistic. What does that mean? That means that the IRS will look at these 9 factors and there's not like you did 6 out of 9 or 9 out of 9, you're good. They look at all of them, meaning no one factor is decisive. And that means it's a pretty complicated test. My advice would be to make sure you hit every single one of them. You can find these in several different IRS publications. Here is an IRS website. Here's how to tell the difference between a hobby and a business for tax purposes. And there's a long list of factors. This time there are 11 of them. I've seen it presented different ways. Some sources tell me 9. This is right from the IRS, so we're going to go with the IRS. So let's go with 11 factors then, right? And no one factor is decisive. In IRS publication 225, there are some bullet point lists. They are basically the same. The language is very similar. I'm counting 10 bullet points on that list. So maybe there are 9 factors, maybe there are 11, depending on what source material you're using. That always makes things more complicated. But as you read these factors, they're all basically the same. And the first one on every single list is the manner in which the taxpayer carries out the activity. To be real specific, are you operating your business in a business-like manner? If it's a farm, are you operating in a business-like manner? Do you have expertise in the area? Do you actually know enough about what you're doing to run a business? A lot of people try to run a business without knowing what they're doing. They tend to go under. Common one on every list is the time and effort. Are you investing enough time into the endeavor in order for it to make a profit? Do you depend on the income for your livelihood? That's an important consideration. If you don't need the income in order to survive financially in the world, then it's very easy to conclude that it is a hobby and it is not a business. If you're losing money, are the losses due to circumstances beyond your control, such as the normal startup phase in any business or something like bad weather event? A common one on all of these lists is, are you making changes? If you're not making a profit, are you making changes that will lead to you making a profit? In other words, are you going out and getting good advice and then making changes based on that advice? Because if you're not attempting to make changes, then it's pretty easy to conclude you're not trying to make any money. Again, do you have the knowledge? Do you have the expertise needed to carry out the farm as a business? Have you been successful in earning a profit in similar enterprises in the past? Maybe you had a business before and shut it down for whatever reason, and you're starting a business again that's very similar. And if you can show that in the past you've made money doing something similar, that is evidence that you're trying to do this as an actual business instead of just out playing around having a good time. Now, what happens oftentimes in a business is some years are very successful and some are not. And so maybe you make a profit in some years, and in those years it's a really large profit. So they're going to look at kind of that whole picture. And can you expect to make a profit in the future? For example, are assets going to appreciate? And of course, the presumption of profit is your most valuable tool to prove to the IRS that you're trying to make a profit. Actually go make a profit. And I want to talk about some of these in greater detail. And the one I want to hit first and talk a lot about is the question of, are you operating your business, your farm, in a business-like manner? And what I tell my students, what I do for my things that are business-like, is I pay money for an app on my smartphone that tracks expenses. Every time I buy something, I take a picture of the receipt. The app, if I buy something online, the app will let me email something to the accounting system. And so an email becomes a receipt. So every time I spend money, I have a record of it. Every time I get in the vehicle in order to drive someplace for the business purpose, I'm going to pick up supplies or something like that, going to go do a business thing, go meet a customer. I mark the mileage through my app. We live in a modern era where we have tools that we can use to track expenses and keep records. So it's really easy for us to operate in a business-like manner. One thing, for example, are you running your business out of your personal or household checking account? Or have you started a separate business account, bank accounts for your business and credit card accounts for your business? Because if you're using your personal credit card to make business purchases and not earning a profit, I don't think you're running a business. The IRS isn't going to either. Have you taken the time to do a business plan? Do you have financial statements? Can you show me your P&L? Can you show me your balance sheet? Do you have a cash flow budget? Do you even have a budget at all? How about a business license? You just take time to file a license? Did you take the time to send a form to the IRS to get an EIN? EIN stands for Employer Identification Number. If you have people working for you, you have to have one of these. If you don't have one of these, you're putting your social security number on all of your paperwork, which means you've got a potential security breach. Maybe you should buy some business insurance. If you're running a business, you probably should have a separate insurance policy because your homeowners might not cover. So you've got to operate in a business-like manner. And that is the reason for this class that I'm teaching, because I'm trying to coach you into operating whatever business you're doing in a business-like manner, because the IRS expects it. It's not me saying you have to do it. The IRS wants you to do it. And I don't have authority. I'm nobody important. But the IRS scares the hell out of me. And I want to do everything I can to familiarize myself with their rules enough so that I can have a conversation with an accountant and understand why things have to be done a certain way. Now, a little reality check here. I don't want to scare you off from running a business. When you start a business, you're probably going to start it small and you're not going to run it like a business. And you're going to look up one day and realize, hey, I've gotten to the point where I actually need to operate it like a business. My suggestion to you is every month, spend a little bit of time working on the business, working on improving things like your record keeping. As you get more cash flow, pay for the app, pay for the business insurance, grow into it. How hard are you working? Are you putting enough time into the business in order to actually prove that it is a business? Right? If it is your only source of income, it's pretty obvious to prove that it's a business. That's a no-brainer. But maybe you got a job in town and you've got some crops you've planted and you're going to go out into the field and scout for weeds, scout for bugs, check on your crops periodically. Livestock, right? If it's the middle of the winter, it's calving season and you need to be going and checking on your cows, checking on the mama cows. You might have to pull a calf. And so you have to check on the livestock every day. You've got to go out and feed them, right? On the flip side, are you up in the morning in your deer stand, out on your property, not actually trying to produce the livestock and just enjoying riding around on your side-by-side? Do you depend on the income for your livelihood? If you make $250,000 a year in your off-farm job and your farm generates $10,000 in profit, it doesn't really matter to you. That's not going to look good for the IRS. But if your off-farm job makes $25,000 a year and you make $10,000, then that's a really big chunk of your income. And so the IRS is more likely to look at that and say, you are actually doing this for a profit. I'm not the IRS. I can't read their mind. I don't know what they'll actually do. This is the kind of thing that their online documentation says they're looking at. Again, this isn't tax advice. I am not a tax professional. Are you making changes to improve profitability? If you're not making money, you have to change in order to make money, especially if you're trying to argue that you're running a business. If your business isn't making money and you're unwilling to make changes, then you're going to go out of business. You're not really trying. In agriculture, you can go to extension meetings, get certifications. You can sit down with budgets. You can do break-even analysis. You can track your yield on in your cornfield. You can change the way you market. Maybe you're selling vegetables at a farmer's market. Instead of selling one day a week, find a second farmer's market. Sell a second day a week. Maybe hire consultants, right? Find people that you can get advice from. And of course, do you have the knowledge needed to carry out the activity? Did you grow up on a farm? Maybe if you didn't grow up on a farm, do you really know enough about farming in order to actually farm, right? Is your spouse an accountant? Did you marry an accountant? Great. Your accountant spouse has the knowledge to run the business. Have you received any training? Do you have a relevant degree? Do you have any certifications? Who's giving you advice, right? Who are your advisors? Do your advisors know what they're doing? And the take-home lesson here is that if you're running a business, it's very important that you run it in a business-like manner. At bare minimum, have a separate checking account. If you can't even be bothered to open a separate checking account for your business, I don't think you even have any hope running the business. Bare minimum. Even the smallest of businesses can operate a second checking account and keep their business going that way. I'm Dr. G, and this is Agribusiness with Dr. G. Hope you enjoyed the video. Click here for another one.